Good morning and welcome to the Morning Bell. I'm Robert, joined as always by Lizzie and Steve. It's Friday, June 19th, 2026, Juneteenth, and markets are sliding this morning as US-Iran nuclear talks hit an early snag following failed Swiss negotiations. Lizzie, what are the main themes you're seeing in today's news?
Thanks, Robert. The dominant story right now is absolutely the Iran nuclear talks breakdown. Markets came into today with cautious optimism around a potential deal, and when news broke that the Swiss talks failed to proceed as planned, we saw immediate risk-off behaviour, stocks slid, oil moved in conflicting directions, and sentiment soured quickly. What's interesting is the dual oil dynamic. The Iran deal failure would normally be bullish for oil prices, but simultaneously, we're getting reports of an Israel-Hezbollah ceasefire agreement, which sent oil prices negative. So energy traders are caught between two geopolitical forces pulling in opposite directions. On top of that, the broader macro narrative remains challenging. Central banks, including the Fed, are signalling that even a successful Iran deal would provide minimal relief on the inflation front. Europe's gas storage situation is also getting limited benefit from any Middle East resolution, which keeps the energy supply picture murky heading into the second half of the year.
There's a lot of geopolitical noise to navigate. What else is catching your attention beyond the Iran situation?
The SpaceX story is generating significant conversation. Elon Musk's stake is now valued at over $1 trillion, and analysts are debating whether a post-IPO valuation could reach $2.5 trillion. Jim Cramer issued a fairly stern warning to buyers at these levels, and Motley Fool analysts are questioning whether there are better trillion-dollar opportunities elsewhere. On the banking side, there are two notable regulatory developments. The EU is moving to remove barriers to banks' cross-border capital flows, which is a meaningful structural shift for European financial integration. And the Bank of England is planning to dilute capital rules for investment banks' trading activities. That Bowie move is worth watching because it signals a softer regulatory posture in the UK, at a time when global banks are already navigating a complex rate environment. And then you have Mukesh Ambani filing for the Jio IPO, which is shaping up to be one of the largest listings we've seen out of India in years.
With all of this backdrop, geopolitical uncertainty, regulatory shifts, and a risk-off tone. What does this mean practically for traders today?
The keyword today is caution. When you have geopolitical uncertainty layered on top of already elevated rate anxiety, the market tends to punish anything that was priced for perfection. Traders should be watching their stop levels carefully and avoiding chasing any intraday bounces that aren't confirmed by volume. The Iran situation in particular has a binary quality. If talks resume and show progress over the weekend, you could see a sharp Monday gap up in risk assets. If they deteriorate further, the downside could extend. So, positioning heading into the weekend matters more than usual right now.
And when you look at the major indices technically, what's the picture telling you?
On the S&P 100, we're seeing a notable loss of momentum after what had been a fairly constructive recovery off the May lows. The index is now testing a key support zone, and if we close the week below it, that opens the door to a more meaningful pullback in the sessions ahead. The Nasdaq is in a slightly more precarious position. Chip stocks had been setting records recently, but there's a concerning chart pattern emerging that suggests the momentum trade may be running out of steam. The hidden bearish divergence in that sector is worth watching closely because tech leadership has been carrying the broader market. The Dow is actually holding up relatively better, which tells you rotation is happening. Investors are moving toward more defensive, value-oriented names as uncertainty rises. Overall, the technical picture across all three indices is flashing yellow rather than green heading into the weekend, and I'd want to see a clean hold of support on Monday before getting constructive again.
That's a measured read on a complex tape. Now let's turn to crypto, Lizzie. What are you seeing in the digital asset space heading into next week?
The crypto picture is broadly bearish to neutral heading into next week, and Bitcoin is the clearest illustration of that. BTC is sitting right around $63,000 today. It's actually Juneteenth, which is a notable coincidence given the headline, and this is the fourth consecutive down day, which is a meaningful momentum signal. The core problem is macro. July Fed rate hike odds are approaching 40%, and the dollar index is on the verge of a technical breakout. Bitcoin and the DXY have a historically strong inverse correlation, so if the dollar breaks higher, that creates a structural headwind that technical support alone can't absorb. The critical level to watch is $62,000, a confirmed daily close below that opens the door to a test of the $58,000 to $60,000 range, and some analysts are calling for a Q3 macro bottom near $50,000 as part of a liquidity grab pattern. On the institutional side, the picture is actually quite constructive beneath the surface. Franklin Templeton has filed Bitcoin dividend reinvestment ETFs tied to US stocks, BlackRock's Jay Jacobs is noting that US crypto ETFs are pulling Bitcoin holders into traditional finance, and Oman has launched a national Bitcoin mining pool. So the long-term infrastructure is building, but short-term, the bears have the edge. Ethereum is the weakest of the three. The Ethereum Foundation is experiencing a genuine leadership exodus, with co-executive director Ho Wei Wang's resignation being the latest in a series of departures, and there's a reported core development funding crisis. Technically, ETH is struggling to overcome the $1,700 level, and analysts are calling for a potential drop to $1,580. This is a situation where the governance risk is real, and the price chart confirms it. Solana doesn't have the same idiosyncratic negatives that Ethereum faces, but as a higher beta asset, it will amplify whatever Bitcoin does. If BTC breaks 62,000, expect Sol to feel that more acutely. The relative silver lining for Solana is that Ethereum's instability could eventually drive developer and institutional rotation towards Sol, but that's a medium-term thesis, not a next week trade across all three, bearish short-term, with Bitcoin having the strongest long-term structural case of the group.
That's a thorough read on a challenging week for digital assets. That's all we have time for on today's Morning Bell. Remember, do your own research and consult with financial advisors before making any investment decisions. If you found today's conversation useful, please subscribe to the Morning Bell wherever you get your podcasts. We're back every weekday morning to help you start your trading day informed. Have a great Juneteenth weekend, everyone.